Hey, what's up, guys? Sam here. Kicking off the 9:30 for February 4th, 2026. Good to see you. Happy Wednesday. Hope you're having a ENPH kind of day. Looks like some of you are having an ENPH kind of day. Those are always the best. Rank the stocks by most movement, and your stock is sitting at the top. That's a good feel. All right. Well, let's see. Looks like John put on a 6,900, 68.75 put debit spread, about $6. It seems to be about the right strategy. I think I'm a little late. $6,900, 68.75. It's already going for 8. Sounds about right. That appears to be the right strat. That appears to be the right strat. The Hand of God buy program is not active and has not been active now for 2 days, and you see how the market behaves without it. It actually starts to trade pretty much exactly as you would expect, where you'd get bounces. Keep in mind this level, we've mentioned it about 1,000,000 times now. It's the 54 strike on ES. It's a major previous high. You get up there, you wick off it, create a sell signal, and it actually breaks, right? When the Hand of God algorithm is running, that does not happen. So far, all of this looks completely standard. I don't think the bears, or the bulls, I should say, are out of the woods until they get above here, which is going to be the VWAP. I'd give you 54 as a start. There's a few levels. They've all been pretty important. 38 I have as a level, 54 I have as a level. And if you're trading below those, I kind of view them as, 50-yard lines. So the pressure would remain on. And of course, you got some bearish conditions on top of it, and a 15-minute squeeze pointing directly south. So all of that looks good for some downside, I suppose. I do declare. I am not of the belief that earnings is going to save anything, personally. I think that from what I'm seeing on my indicator, it looks like the NASDAQ is just waiting to release to the downside. We've talked about this. I'm going to make a point real quick to show you one more time. I think it's important. I also think it's partially my job to destroy all hope. When they hired me at Simpler Trading many moons ago, they said, "Sam, are you comfortable with destroying their hope?" And I said, I'm more than comfortable destroying their hope. I'll actually take a pay cut if I can destroy their hope more often. I'm kidding, of course. I'm kidding. But, and I probably won't show this again just because I don't want to show it every session. But this is kind of what I'm working with. And barring some external catalyst, and I don't personally think earnings is it. I don't know exactly what the external catalyst could be at this point, but this looks a lot to me like back here. So I'm a pretty big fan of fractal patterns. History does not repeat, but it does often rhyme. And the fractal pattern here, and actually you'll see it better on the cues. Did I show you on the cues? Yeah, let me show you on the cues. Pretty fat bounce here. Seemingly out of nowhere. It was about, what, 20 points in a candle? Jeez. The only thing I would say that would be a little bit cautious is that the Mag 7 index is at its weekly 21. So that's kind of the one thing that's going to create a little bit of tension from fully letting go, I think. So this is probably good enough. So take my word for it that you had an uptrend going into this. You go up, you go down, up, lower low, and then you start going into this formation. Right? I'm just kind of tracing it in so you can kind of see what I'm talking about. Kind of a flat top here and a rising set of lows. But notice this very important condition. It's all happening under a red condition. Okay, so that's precedent, or at least that's what I'm looking at as some level of precedent. Here you have an uprising move, down, up, down. We got our flat top, and we got a series of higher lows so far. And this time, it's happening under a significantly longer negative orientation. So basically, my premise is that these two things, that and that, are the same. And this one that we're in now is a significantly bigger one, as is evidenced by the duration of the indicator in a negative orientation. So, long way of saying that the NASDAQ needs a hero, and I'm not entirely sure what that hero could be, but maybe Google can go up 20% and do it. But that is that's kind of the backdrop. Now, of course, everybody wants it to just go ahead and or I won't speak for everybody, but when I see this, it's just easier if it lets loose as opposed to wide range chop. Although I prefer wide range chop over no range chop. And yeah, that's kind of the way that I'm looking at it for now. So it's not the easiest to say let's get super short long term because the market has been up and down quite a lot every day. And until this thing actually lets loose, it's actually more advantageous to just kind of beat it up and down. So I wanted to show that recap of yesterday's trade. Let's take a look at it. So we bought some SLV, or not SLV, SLB is in Bravo. And it's pretty much hit the target right here. I think it has higher targets, but I'm trying to respect this major 618 at 50.68. So relatively easy trade. I don't ever want to call things easy, but we got in, it went straight up, it pulled back, and then it went straight up even more. So if you're still in it, I don't necessarily blame you. I gave it too much duration. I probably could have just done next week's calls as opposed to the monthly, but heuristically, I just defaulted to the monthly. And yeah, just bang, bang kind of trade. So not a lot of excitement there. On to the next. You guys remember when I pulled up Airbnb on Monday and I said it was a short? And in typical Sam fashion, I got distracted by shiny object, some jingling. Somebody jingled some keys in front of me and I got distracted. And look at it now. I still think this is a short. I still think this is a pretty big short. And of course, going back to this guy's proving itself to be a short. I've kind of harped on this one. I'm kind of kicking myself yesterday because yesterday was the entry to reload, to add the short back on that big pop after earnings, but nothing here has changed. And I think this is going to be basically pulling a Netflix. So I've talked about this one rather endlessly too, but I think that Palantir is basically coming back down to kind of this zone here. At the very minimum, I think it goes back to 130. Makes it a little tough to short it now, down 15, but I don't think this move is over personally. So I'd like to find the next one that looks like this. Unfortunately, or fortunately, depending on your bend, the next one that looks like this is actually Avgo. Avgo getting a little nasty here. So I'd like to see a fat bounce on some Google hope. I'm much less hopeful for Amazon, but I don't mind being hopeful for Google. So maybe Google gives this thing a huge pop, ideally. 335 would be a great spot. But the next one that looks like Palantir, and keep in mind that these things are all in the different stages of the same signal. So if you look at Netflix on the weekly chart, the signal that I've been harping on with Palantir, and now I'm going to show you on Avgo, that signal already played out, right? It destroyed Netflix the whole way down. Palantir is like in the middle where it's playing out, but it's nowhere near as destroyed or complete as Netflix. And now, of course, Avgo here has the same signal. So Avgo would be kind of the youngest expression of this signal. So it doesn't usually bode well for the most important part of the market, which is semiconductors. And then let's jump over to NVIDIA. And NVIDIA now has the same signal with a high compression squeeze. So NVIDIA would be the youngest of the bunch. Avgo is more advanced. Avgo is already here. Palantir is already here. Netflix is already down here. So not usually a great thing when you look at the most important parts of the market, the most important part of the market, which is semiconductors, and the two big gorillas in the room have that caution, I'm about to get destroyed weekly signal. So not overly optimistic about matters. I've seen better days for the market. All right. So I don't really have too much here. I'm going to kind of rely on you guys to point me in the right direction. I think that if I were looking for a trade, I'm kind of vibing with what John is doing there with that put spread. I don't have it, so that means it's going to be a 10-bagger. So the only thing I have on my notes here is to give props where props is due. And I'm going to do it in two different directions. First, I'll start with the obvious direction, which quick shout out to the boss man. Watching him trade yesterday was quite a treat. I felt like I was watching a cat with a ball of yarn. He was just batting the market around left and right. So that's always fun. That's the kind of trading I like to see, up and down, hitting it on both sides, and he did a pretty damn good job of that. Second shout out I want to give on the opposite end of the spectrum, but no less respect and love, is for Mr. Taylor Horton. He was in NVIDIA. He got out yesterday at a loss, and I sent him a message and I said, good exit, good trade. Why would I say good trade on a losing trade? Because it's not easy to get out of a top stock, especially, and this is kind of unique for us, and I'll tie it back to you here after I say this. It's not easy to get out of a losing trade in a top stock when it's a public trade, right? You always have this hopium of like, well, it's NVIDIA, it'll bounce back. But to stick to your plan and actually cut the trade and eat the ego is that's a good trade. And I promise you, literally nobody told him that was a good trade because they're looking at the outcome. I told him that was a good trade because he followed his plan. So not easy, but definitely worth a shout out. Okay, yeah, I don't really think I have all that much more. Mm-hmm. That was a big pop in the futures there real quick, but nothing changed. It's just aggressively choppy. I'd like to join that put debit spread that John sent out. I don't have it. And again, that's probably best case scenario for you if you have it. That means we're going to go limit down. But I'd like to wait for a 15-minute signal. I could do it now. If I can get a 15-minute sell on this thing, I think that seals the deal. The thing is, if the bears are going to hold a level, they have to hold here. And without the seek and destroy algorithm buying every 2-minute undercut, this should be the level to hold. The white line is a previous major support level from way back when. The red line is the hourly 200 on SPX. So think of it kind of like, this is a stronghold of defense. So personally, what I'd like to see before I get into the trade is a little down arrow there. That would certainly help things. And maybe maybe closer to the afternoon, that'll happen. If it happens now, I'll just jump in at whatever price. All right, so let me make sure I have this queued up here. All right, let me queue that up, and I'll wait for my execution. Okay. One last thing I'd like to point out here is that all of the action is really representing late stage cycle stuff here. Meaning that in the late stages of these, in my opinion, where we are in the current cycle, tech will not perform. Leadership, basically the way it works is the leaders lead, and then when the cycle shifts, which is where I think we are now, the leaders will no longer lead. And then the leadership switches from wherever it was. In this case, it would be tech and semiconductors and software a long time ago now, to, and hold on to your hats, to staples, energy, that kind of stuff. So as you probe through the markets on your own, and be sure that you kind of understand the weighting of the chess pieces. What does that mean? It means that if you start to see money flow out of semiconductors and flow into staples and energy, do not view that as an equal exchange, because it's not. NVIDIA is bigger than the entire XLP put together. So, and probably the entire XLP and the entire XLE put together. So be sure to be able to understand the importance of each sector, and they are not one-to-one, right? Just think in terms of chess. Staples are a pawn. Energy is a pawn. The semiconductors are the queen, right? If you lose a queen, but you take two of their pawns, that is not a long-term viable winning move. So just a quick note on that. And that's kind of what I got. that's kind of what I got. So the only thing I've done today, I woke up, I closed my SLB. I had some Halliburton, which is basically the same trade, although Halliburton actually looks a little better. Closed both of those out. I still have my USO position. I'm holding that one. That one is longer term. It's out until March. I have the 75-85 call debit spreads on USO. And I have not actually gotten a chance to do anything on the indexes today, despite all the action. So I'm a little bit left out on that one. So I'm going to punt it over to you guys. If you have anything you're looking at, I think today might be a decent session for that. It wouldn't be that outrageous that we actually chop around and wait for NVIDIA or for Google and Amazon. My bias is Google beats, Amazon gets wrecked. I don't think consumer stocks are doing well. I think this whole meme of a strong economy is literally a meme, and it's one that I think I personally find laughable, but that's neither here nor there. And then, of course, Microsoft missed on cloud. Last I checked, Amazon has a cloud. So we'll see if the money flowed from Azure into AWS. And if it didn't flow into AWS, then that actually raises a huge warning sign that it's just not flowing in. So my bias is Amazon gets wrecked, Google does not get wrecked, and likely causes a break-even effect in the market. Yeah, Steve, I almost don't want to go down that road. It's better if I do it when it's actually happening, because to some of you folks, I would imagine to the vast majority of you, when I talk about that stuff, it's going to make me sound like a kook, and I don't need any help sounding like a kook. I'm the old guy sitting in his front yard wearing a tinfoil hat, yelling at the kids. Yeah, so I've already kind of talked about that one a lot last week. So maybe if you're really interested, catch the recordings, or if you're really interested, let's go personal with it. Let's go private with it, and just email me, sam@simplertrading.com. But I've shown the pattern a lot. Basically, here's what it is. It's basically just a Wyckoff spring that happens 5 to 10 times a day on a 5-minute chart, right? So what does it look like? Basically, it'll have like, it'll be like a known low. Like this is your known low. Where's everyone's stocks? Where's everyone stops when you're trading in a pattern like this? It's very obvious, right? Everyone puts their stop at the low and at the high, right? So you come down, you grab the liquidity, you pop it back, and then they do that. They stop out everyone, basically on both ends. But then the characteristic, or the key characteristic, and kind of the reason that I have the silly name of Hand of God, is you undercut the lows, you catch it, instead of continuing, you catch it, you reverse it, you break it above the highs, which triggers a series of stop runs. And then there's two characteristics to it that I think are important. One, after it pops above the high, there's no volatility whatsoever. There's no pullback. There's no volatility whatsoever. You get the tiniest, grindiest thing you've ever seen in your life until the next one, and then it does it again. Two, it'll be multiple times per day, usually on a 5-minute chart. So this pattern of the undercut of the low, the liquidity grab, and then the push higher, this is a very well-known pattern. But usually if it's an institutional pattern, it'll happen on an hourly chart. It'll happen on a daily chart. It might happen 3 times, maybe 5 times a week on an hourly chart. That's being really generous. I was seeing it happen 5 to 10 times a day on a 2 and 5-minute chart. So the frequency of it just is a little bit off. At the end of the day, when you see this pattern, to put a non-kook spin on this, just do not F with it, right? If you recall, I think it might have been on Friday or Thursday of last week, somebody asked about shorting the market when it was kind of on a tear. And I was like, this is the spot to short it, but the vibe is off, right? And that also may sound silly to call something a vibe, but this is kind of the point. And then what happened? We broke 90 was the level on ES. For some reason, I remember that. We broke 90 by like 3 points, and then it spiked up and grinded up by like 15 points, right? And so basically, when you see this pattern, there's no shorts to be had. I do not see that pattern today at all What I'm seeing is actual interplay between how the market usually trades, which is when it breaks down, it finds resistance right where you would expect, and then there's a battle to be had. So that's kind of the quick point on it. But if you want more info, let's chat about it on email. So I'm going to go through the chat, see if I missed anything. If you have anything, don't wait till the end. These are short sessions. Another kind of half shout out was I'll give a half shout out to Danielle. I listened to her session yesterday, and it's always really entertaining to listen to her. You know it's a good session when it feels like it's been 15 minutes and it's been an hour in reality. So always fun to listen to her sessions. On the schedule, it actually said that her and John were going to be doing the close together. So I was kind of excited about that. I think that those two would have pretty good chemistry. I'm just going to put that out there into the universe. I'm going to manifest that. So I think we should do some more dual sessions. Maybe a little bit more, especially on slower days. But I think dual sessions would be kind of cool. So I'm going to put that out there into the universe. Good to see a bill. Bad company. Craig, you closed your EMPH like I sold my silver. Live and learn. Many stocks under the surface of the NASDAQ have been heavily sold. Yeah, no, for sure. For sure. The main thing that's kind of keeping things up is the semiconductor space. But I think that I've shown you the signals that that space is very, very vulnerable. I just showed you Avgo earlier. I showed you NVIDIA earlier. Of course, nothing goes straight down in a straight line. And it has been a market really to more focus on day trading. But I think we might be approaching a point where it actually just lets loose. So I'd like to kind of keep that top of mind. Yeah, we could look at Zoom. It's not one that usually comes up. Shop. Let me just make sure I'm not missing anything here. Okay, actually, I do have a 15-minute sell. I'm going to have to join you guys. Hopefully, I don't kill this trade for you, but I have to join you. Donk. Order not filled. Yeah, I'm going to have to join you. Okay, so now we wait. I was waiting for a 15-minute arrow. This isn't a confirmed arrow. This is a fresh candle. So this does have 14 minutes to turn off. So it is a slight front run of the signal, but it's fine. It's fine. Zoom. I've not looked at this stock in a long time. Maybe Zoom will hold up the whole market, guys. What do you guys think? NVIDIA breaks down, Avgo breaks down, Zoom triples, indexes stay balanced. This looks unnaturally good. You bring up Zoom, and I was like, yeah, that's going to be garbage. This actually looks really good. Weekly chart looks great. It's a little hard to buy this because it's like, what the hell is Zoom even doing here doing this? But this looks really, really good. Let me actually focus here for a second. I'll go back to Zoom. That looks really good. The only thing I can tell you on Zoom, I probably should trade it just because it does look really damn good. I probably won't trade it just because I don't understand it. Not that I have to, but I'd like to have slight understanding. The only thing I would give you here is just with these IV structures and this setup, you probably are better off doing butterflies with a broken wing. Don't give yourself any upside risk, or do put credit spreads. Buying calls here, although completely justified by this weekly setup, which looks phenomenal. If it doesn't really move with a big kick, you could actually buy calls. It goes up and you actually lose, and that would be annoying. So just mind your IV here. This is kind of screaming to sell premium here. But that does look really decent. So somehow the market's moved all this time, and the ES has a 5-minute squeeze that has not triggered, a 15-minute that is waiting, and a 2-minute that is bursting at the seams to try to let go. So let's see if all the signals make any sense here. The NQ trading below its weekly 20 is not usually great. Normally I would look for an undercut. These are just very heavy patterns. Let's stay here for a second. Let's see if we can use our collective manifestation to get a low of day here. I am trained to always look for the undercut reversal just because it's been such a prevalent pattern. The undercut reversal. I mean, I think the water is warm around 6,900 ES. But if they're going to undercut it, this is usually where it is. So don't put anything in the bag, despite the fact that the signals would heavily imply that this breaks short. Like this is almost a perfect short signal, which again, it always makes me a little nervous. Just a wee. Even the Russell's giving it back. Okay, well, I'm gonna just let that dance. A watch pot does not boil. Somebody want to look at shop. This one's probably destroyed. I haven't looked at this one either. Yeah, that's about right. That's about right. Oh God, that is destruction. I mean, there's no particular setup at the moment. The short has been had. The short was right there. Like, Captain Hindsight, but I don't trade a lot of shop. But just so you know what it's supposed to look like, that's the short, right? Always look here first. Always look here first. Everyone likes the lower indicator, but in reality, this is actually what drives everything. When you have this condition, then you just wait for this condition to trigger, right? You want to have alignment. And when you have a squeeze, that's the signal. And then you can see kapoom. At this point, it's somewhat of an uninteresting chart just because I don't have anything to do with it, long or short. Watch for the undercut. Am I ever optimistic? Surprisingly, yes. I'm just more entertaining when I'm not. All right, guys, let's find a good setup today. I think the SLB one was the one for yesterday. Let's find one for today. In an ideal world, we get a big pop after earnings today, and then I get a chance to come in and actually short that Avgo. It's not easy to say that, but the setup implies that is the reality. Yeah, I mean, at this point, there's a level at 25,025 on the NQ. It's a major previous low from like 2 or 3 weeks ago. 25,025. I would be pretty surprised if we don't have to go down there and tickle it. I would be very surprised if we don't go there, tickle it, and then have some type of reversal attempt below 25. So that would imply at least another 35 more points on the NQ. If you factor in the undercut under 25, then it's probably closer to about 60. But so far, at least the signal is signaling. Toll here looks really good, especially the weekly. The only problem with this one, it's a little thin. This looks great. I like it. Great pattern. Once it closes above that line, I think it should be good to go. Very nice, kind of whatever you want to call that. You know, you can call it that. Whatever you want to call it, it's a bullish pattern. Good, two good picks so far. ZM was kind of unexpected, but that one looked really good. And Toll looks quite good as well. I'll jot them down. I don't know how realistically I'll trade them, but let me take a look at Toll. TG's been talking about home builders, so maybe he's onto something. Toll's just not overly tradable. These spreads are just not friendly. If I look at the money for the monthly expiration, it's 80 cents wide on a $6 contract with 15 volume for the day. Is there better liquidity in XHB? Not even. There's less liquidity in XHB. Great setup, just not overly liquid. Nice candles out of nowhere. That's a nice little candle there. It doesn't seem like a lot on a 2-minute chart. Doesn't look like a lot, but that's actually a decent pump there. 17 points. Not bad. Now, nobody asked me, but I actually think the most bullish thing that could happen is if you actually did get the flush of 25,000 on NQ. Flush them out, because the psychology of it is you have folks that are in positions that are clearly not buying more. So they're in a bad location with fear, wanting to sell pops. So if you can then turn that market over and you flush them, right? Because if it doesn't flush 25,000, then they hold on to their positions, they maintain hope. But if you can destroy their hope by flushing them, that psychology gets flushed out of the market, because then a new buyer comes in. That new buyer is not underwater, is not fearful, and then you have a fresh batch of position holders that can then push it higher, and then the original person that got flushed then chases it back higher, as is tradition. So nobody asked me what I want to do with the market, but if it were me, that would be the most bullish possible outcome. You used to work for Halliburton. Yeah, Steve, you got it. Yeah, it's a Wyckoff spring. It's just the there's a wrinkle with it. It's a Wyckoff spring, but it happens for a while there. There was like 4 or 5 days where it was happening with 100% hit rate. I was actually counting. And it happens multiple times per day. So instead of happening like on a daily chart, which is where typically institutions would do it, or an hourly chart, you might see it, 3 times a week on an hourly chart. You'd see it, five or more times a day on a 5-minute chart. And the dynamic makes it unshortable when that dynamic is in play. So and that's fine, right? Like you just go with it, and then instead of fighting it and having it be headwinds, you just go with it, and it becomes tailwinds. So it should never lead to frustration. You just have to pivot and go with the flow. Pivot. Hey, what's up, Tim? Honestly, if Toll had any liquidity, I'd be buying it. Ideally on a small dip, but that's actually a very reasonable pattern. I think TG's up after me. He'll give you more information because he's been on the home builders. Let me look at bonds. Usually home builders don't go up. Bonds are not going up too. I mean, nominal. CEG. It's a small bit of destruction here. So notice all these components of the AI trade. Like there seems to be a theme, right? The theme seems to be there seems to be some level of rejection of the AI trade, and you're seeing it on the flip side with Apple, right? Apple always kind of sucked and lagged at AI. They were too busy coming up with different color wristbands for your iWatch. Truly innovative stuff. But notice how Apple here, up a smooth 2.5% is no joke on a day like this. There seems to be a rejection of of the AI trade. CEG would be a component of that, only in so that it's peripheral to the AI trade in terms of powering it. I don't have anything for you here. I don't have anything for you. I mean, this thing's absolutely wrecked. I can't get in long. There's no reason to buy it. I can't short it because I can't control risk here. The only thing I'll point out is be aware that when the indicator looks like that, and I've shown you lots of examples, and price is trying to go up, it doesn't usually end happily. It's very similar. It's almost identical to the pattern that I showed you in NVIDIA. And frankly, actually, let's keep this in mind. I'll show you this as clean as I can. Look at this. You have a consolidation pattern, a slight uptrend, not a super strong one, into a consolidation pattern. and look at the indicator. See how the indicator's calling bullshit on all of that? Why does that matter? Because if you go to KKK, also known as the triple Qs, what do we have? Uptrend, consolidation pattern, indicator saying nope. So I don't have anything there on CEG. Long or short. This is the stuff I think actually works, is the boring stuff. I could probably find better ones than this, but this actually is where I think it actually will work. Again, I don't have a trade set up here, so I think buying the pullback is the play. I have a squeeze that's firing today. There's a 2-day squeeze on the back of it, which is good. It's a good chart. I would expect some resistance at 58, the weekly 200, which is sloping down. Let's do this, because this might be a better way to go about this. Instead of taking individual shots, why don't we look at the places that are likely to benefit? So let's actually look inside XLV and see if there's anything that looks decent. Lily Bell with a casual 100. Smooth 100 on Lily. They gave back this pop pretty fast. When the market does not have the hand of God, it actually does not trade well. They need to keep it so hyper aggressive that, because what the hand of God does is it prevents breaks on the microstructures. If you can't break a 2-minute microstructure, or let's say a 5-minute, both of them would be considered microstructures. If you cannot break a 2-minute microstructure to the downside, the market will never drop. Right? You can't get a sell signal on a 15-minute chart if you never get a sell signal on a 5-minute chart, right? This is not that. This is actually trading as normal. This doesn't have any this doesn't have any like Big Brother backing you up kind of energy here. So unless the hand of God is ever present, I would be quite careful. So we got Taylor's favorite stock, which is Merck. Most of these look pretty good. There might be a play there in XLV. It looks like a failed squeeze to the downside, which can actually create kind of a slingshot effect. J&J is just ridiculous. AbbVie's a little tough. Lilly's definitely looking like a slingshot squeeze, but I think maybe playing the field makes sense. Yeah, I'm not really seeing anything here that's like a great setup. Let me take a look at XLV real quick. Because what should be the beneficiaries of this, if they continue hitting tech, which is fully the expectation, then the beneficiaries are staples, energy, and healthcare. All of your favorites. And the crowd goes mild. I'm not quite ready to buy this. I'd like to see a little bit more. There's a little bit of funk here. But I'll keep an eye on this one. I think it plays well. What I get filled on, I joined the JC put debit spread. Yeah, I was waiting on a 15-minute signal to join it just to get the full confirmation. So once I got that 15-minute arrow, everything else was aligned. Very unusual though. Like it's the 5-minute squeeze has not triggered short. Well, it's like ridiculously favoring short, but the 15-minute triggered before the 5-minute, which is somewhat unusual. The only thing I would say is just be a little bit careful in this zone here, because if they're gonna do some funky stuff, this is kind of where it happens. So I hate to ever even kind of project funky stuff, because what does that even mean? But if they're going to try for an undercut reversal, usually this is where it would kind of try to occur. Now, if it were up to me, and maybe one day it will be, I would go ahead and just flush 25,000 NQ. I think that's actually the most bullish thing that could happen. You got to clear out these losers that are not buying more. But nobody asked me anything, so just remain judicious. News came out about ZM holding a big stake in Anthropic. So what's the best AI nowadays? I was chatting with a friend this weekend, and he doesn't really use AI, so he was telling me that he thinks Chat GPT is the best, and I kind of laughed at him because I was like, Chat GPT kind of sucks. I've been using Grok, but I also don't use it. I don't really. I'm not a technology guy. I don't really care about technology, so I just kind of use what's the easiest thing to use. But is and I've never even once even looked at Anthropic. I don't think I've even used the Google one. So what's currently the best AI? If I don't even know if that's a silly question, but it's like Grok does a pretty good job for me. Could you comment on the dollar action? What's it doing to the stock market? Is it strong today? One reason the stock market's going down. I don't want to make those levels of correlations, but I don't think it helps. One thing to really kind of keep in mind is, and here's kind of a, maybe I should show you this because this is kind of cool. Yeah, let me show you this real quick. Let's see if it loads. I wanted to show you the S&P 500 priced in gold. And it provides a dramatically different point of view than the S&P 500 priced in dollars. And the only reason I say that is because while normally I wouldn't say that there's going to be like a massively correlated thing where dollar down, stocks up, dollar up, stocks down, I don't necessarily buy that. There is kind of there is going to be some pressure, I would imagine, from dollar up, only because if you think about the dynamic, right? Stocks are priced in dollars, and so think about the dollar as like a ruler, right? Or let's say like a yardstick, right? So let's take a football field. A football field is 100 yards. Let's say that and a yard is about 3 feet. So let's say instead that we now say that a yard is 1.5 feet, right? Well, now all of a sudden the football field is 200 yards in measurement, but the actual size of the football field has not changed, right? You know what I mean? Like it's 100 yards. You take you take the ruler or the yardstick in this case, cut it in half. Now it's 200 yards, but the actual structural football field has not changed. And that's essentially what happens with asset prices, right? Like if you're measuring them in dollars, then if the dollar gets cut in half, just as an example, the perception is that prices are going up and that everything is good. But in reality, the only thing that you're doing is cutting the ruler in half. So for whatever reason, my trading view is not loading, which makes me infinitely sad. But I'll try to have that ready for tomorrow. And frankly, if you have a trading view, you can pull this up yourself. Do SPX divided by spot gold. And you'll see that then in that case, you're now pricing SPX as a consistent measurement with gold, and you get a completely different point of view of things. Okay, let me see how much as I can do here in 2 minutes. So CLS, probably another one of these tech darlings. That looks disgusting. Even before the indicator loads, I can already tell you it looks disgusting. This looks like it's Wile E. Coyote. Yeah, this has the exact same signal as I showed you on Palantir, um, Avgo, and the rest. I'm going to jot this one down because I'm looking for these kinds of stocks, and this certainly qualifies. That looks like it's going to $50 lower. Kevin says McDonald's. Yeah, actually, that's one that I pulled up yesterday. Actually, I have 4 that I found yesterday. Let me see if I can find them. It was Airbnb short, Palantir short, XLP long, McDonald's long. McDonald's here actually plays very well with what we're seeing, and the weekly chart is very good. So McDonald's long here also makes sense. I can't buy it here. That this is absurd. But the weekly chart on McDonald's is basically perfect. So that one would also be in play. Mm, mm. Okay, well, I think that's my time. All right. All right. So kind of a holding pattern here into the reports. Yeah, here's kind of. I'll just leave it with kind of the. I'll just manifest this. I'd like to see a pop on the earnings moves. I'm not confident Amazon's going to do very well. So it'd probably be Google. We'll see how that turns out. I'd like to see a pop because that would have then set up kind of a rush back in. And then I'm still looking for, I would still be looking for more downside. I don't think that what's going on here with the markets is related to earnings. There's something else going on. It's not my job to say what it is. I don't care what it is. But if you go back to the beginning of the session, I showed you the setup on the QQQ. It's pretty strong until proven otherwise. That that it's in a awkward orientation. All right, folks, so that's my time. So I'll look around, see what I can find here. Now that it's going to be a little quiet on my end, I'll see what I can find. I'll probably look to set up something tomorrow. Ideally, we get that pop after the report, and then we can take it down into mid-February. All right, guys, that's my time. Thanks as always. See you tomorrow. Cheers.